Welcome to AxiTrader. So this is one of those cringe-worthy videos.
Stocks, but they kind of faded a little into the close. It had been a really poor lead from Asia and Europe. And when I went to bed about 9:30 last night, the US dollar was under intense pressure.
Intense. That's what I'm talking about.
The euro was stronger. The yen was stronger. Gold was up, I think, in the 1260s. It was really...
You think, but you don't know.
Really under pressure. But all that changed. Market turned around.
All that changed? You mean like reversal?
We had some solid data from jobless claims. Once again,
solid data. Suppose that. Kind of Swiss cheese data.
reinforcing that part of the US economy is strong.
That part. I got to get this accent going on this guy. And look at this nice, I'm not shaving either. And I have a gray beard. But I noticed he went with the no tie. Kind of a casual analysis of the market.
Both jobless claims were weaker than expected, initial jobless claims, and continuing claims fell 22%.
Weaker than expected. How about, is there something between weaker and stronger than expected? How about expected? She's expecting, okay, let's get divorced.
2000. That made another 28.5-year low, roughly. And really does highlight that there are some good signs that growth in the year ahead is going to remain solid. Throw in on top of that, Cleveland Fed President Loretta Mester said that the Fed doesn't want to fall behind the curve, that they will have to tighten again, and that they should start talking about balance sheet, tapering, if I can put it that way. That just reinforces that the Fed is still on track. And the Fed is trying to communicate that this US economy still does need higher rates. So traders could focus on that for a little while and ignore or forget about the Trump trauma, however you want to say it. Donald Trump couldn't help himself last night. The White House released a press statement saying he welcomed blah, blah, blah. The, what do you call it? The special prosecutor being...
Blah, blah, blah.
Appointed, that's the word I'm looking for. But then he went on a tweet storm and both said in a tweet there was a witch hunt and then said again in a press conference with the Colombian, I think it was president, that this was a witch hunt. And so you get that sense that he's just going to keep batting on. And I think as I said yesterday, we want the American president to succeed. And, my read of his personality is he's probably more narcissistic than conspiratorial. But it's now...
Well, thank God, man. You should be more narcissistic. Honestly, we shall be, right? Get stuff done.
For Robert Mueller to decide. I hope he gets it out of the way soon so that we can get back on track and hopefully get the tax
cut back on track.
And the infrastructure spending going in the US economy, which will lift, in turn, the global economy.
Lift. He shrugged his shoulders on that. He wasn't sure about that.
Let's jump straight into the charts now.
Oh, jump to the charts.
We've got a euro cracking price action. I love trend lines. Anybody watches
oh boy.
This video knows I love trend lines. We've got a nice big channel. We've broken through that channel. The euro went too far, too fast. That's a South Sea bubble kind of, it's this way, isn't it, on screen? That's just vertical. A vertical...
Wow, he did a visual representation with his hands vertical.
Moves never last. They always pull back. And so
they always pull back.
We've seen that, after, was 1, 2, 3, 4 days of really strong gains for the euro. It pulled back, but look where it's pulled up. It's pulled up at the top of the...
Pulled back off the top.
Old trend channel. That's really important, folks. Unless or until it breaks down through there. And it still could.
Well, he scratched his ear on that. His body language, you can really read at high speed. So he's kind of iffy about this, and I think you missed that double doji entry here. So anybody that's a price action trader should have been able to... This is how to master price action. You see a doji, there's a trade for that. There's a fix for that. Damn it, got it wrong. Okay, let's get the right color going. I like blue. It's happy. So the price action traders are forced to enter upon doji. Regardless, here's a nice gap open. Hopefully you didn't get stopped out when you get in on this doji. So this doji trading is very profitable. Not a lot of dojis though, so here's your entries. Here's the inverted hammerish looking thing. And right here you have to buy. Buy stops here. I don't think I put a buy stop here. And here's the top. Buy limits here, obviously. Without a doubt. If only for a bounce to here. Look at this top. If you miss this gap, carry this forward. This is support. You could play off of this. I think it's on the daily chart all day long, so all week long. That's a completely obvious trade. Let's go back to his daily euro dollar. He likes channels. If anybody knows him, he likes channels. I don't know what the fuck he does with them. He likes them.
My system is suggesting a short now. It's still good, but I'm not going to put my sell... normally I put my sell below the low of last night. And it has
normally he puts his sell below the low of last night. Okay, so he gets trapped on breakouts on the daily now? This is classic... you just... How is this... Why is this guy posting these?
be, and that's probably the right place to put it because that'll be below the trend line now.
Because that would be the low of the trend line. But if tops become bottoms on a trend line, it broke out of the channel, so now it's really ripping your face off, and it could just be, look at this thing, clean up 4 days. I wonder what he said when we were down here. I don't have this. This is my first experience with him.
In terms of dollar yen, we've seen a big snapback in dollar yen.
Big snapback.
As the US dollar ground higher.
The wet towel in the locker room.
Is that the first wave, second wave of the move higher? It certainly could be.
Certainly could be. This is my favorite comment of the whole thing. It certainly could be. Wow. See, he should be just flipping coins. Look at the stochastics. You're fucking buying here. What are you, nuts? Like, oversold. One big day down. You buy a little bit here, and you just pepper limits below if you think it's going to keep going up. You missed the sell up here, buddy. So here's the price action entry. Mastering price action. See a doji, put an order in. See a doji, put an order. Fucking killer. Super slot. You know, look at this slot here. You're fucking buying. You're up on this trade already. Here's your sell you missed. Here's your buy you missed, wave 4. It's child's play. As long as you keep the bars down to a minimum, you fucking make a mint. Here's stochastics, oversold, uptrend, MACD's above. All the qualifiers are here. We have a pullback in the, I think this is RSI here, I'm not sure. This is like RSI here. Fuck, it's just some oscillator. It's pulled back. Buy. You're in an uptrend. Buy. Now, you're going to have to bail on your exit door is going to be up here. We should know this exit door is going to be this floor that was taken out because we could still come back. So you're going to have to notice the Fibonacci handles are just worthless. This isn't called the bottom at 38. This is the 50. Where's he hanging his fib shit off of? We don't even know. We don't want to know. This is but this is interesting. You can see how ridiculous this is. I think his 100% fib starts up here. I don't know how it helped you on any of these. You're better off just throwing random lines in, honestly.
Now, as it stands at the moment, we'll have to wait.
Because you at least have to figure out a linear risk.
See, I can't. It's interesting. You know, I don't know enough about American politics to know.
It's interesting. He knows enough about American politics. Here we go. Here we go. He's waving his hands like a foreigner now. He wants to make a point. Here we go.
If the president hasn't done anything wrong, none of us do really, and there's all this talk of impeachment and all that kind of stuff. But all the old heads say that we're far from that and that kind of thing. There is a distraction. It does pull up his legislative agenda, although the signs that President Trump and Stephen Mnuchin, the Treasury Secretary, just pushing forward, remain high. So to that extent, they're just pushing forward. So we'll see how this all goes. But what does it mean for dollar yen? Dollar yen, while
he had to push his glasses up. Now he's going to focus here.
Stocks stop falling. Dollar yen will start to lift once more. In other currencies, sterling had a cracking night last night.
Stops falling. We don't know when it's going to stop falling. Look at that cracking night last night. Look at that scalp there. Jesus. Now there's a new high sell scalp. No brainer. Once again. Oops, Fibonacci. Fibonacci is so funny. It really gives you a nice insight to ridiculousness. Once again, what does this have to do with anything? Oh, look at, see now, if you see the volatility breakout systems come in here, very handy. Here, there's nothing you can do, but hopefully you're taking profits on that. Here is the trap. Sell limits here. Here you can go into a non-directional trade and take advantage of this, right? Because, of course, they trapped you here. But this, I'm talking about more than one ticket. Here, and once again, a retest. If you just had a clothesline, you just take the bodies only. You could just turn off the wicks. You can go into MetaTrader and say, I don't want to see the bars. And you can just do a pure body charts instead of, you know, you could have pure body charts or just focus on the bodies. And the shadows are just the momentary lapse of reasons there. So let's go through his here, like here's, see this double doji down here. Look at this fucking breakout on the daily. You know, for people that don't want to overtrade, right there, blow your mind entry, right? Look at this trap here. We're filling this void. They're just ripping the heads off. People trying to sell that trap there. And look at this thing just drift up in a painful drift. This was the quick and dirty make your money and leave trade on the pound. Obviously.
And then an awful night. It rallied up.
Awful night. Hey, look at see his expression there. You think that wasn't awful for all of us?
To 130.48, I think was the high. Remember we talked about.
Gosh, he actually. I mean, the body language here at high speed playback really makes you a body language expert. Like you put hands up, he's going European on us again.
130.50 is resistance for a long time now. 130.48 was the high before it got slapped.
Italian in his breeding.
All the way back, more than 100 points. It is roughly 100 points. It's at 129.50 now. Now, why did it go up? Retail sales.
Why did it go up? He kind of inverted his shoulders like, fuck. It's like, doesn't matter. I missed the move.
Last night were much, much stronger than expected. In fact, the CPI data and the retail sales have lifted the UK economy.
Oh, gosh, he went for the bowling move there with his arm.
Surprise index back into the.
I give you a what for?
Into the black. I should say that the data from the States last night lifted the US.
Into the black. Oh, he's scratching his beard. Dude, I have no beard left. That's all I do all day long.
Surprise index 4 points from negative 37.5 to.
Oh, he looked up to the left. That's supposed to be some body language thing. He's referencing reality.
33.5. But Sterling got knocked back. It's not really what I'm playing at the moment, Sterling. There's a chance.
Oh boy, take a deep breath. That's Sterling.
We made that high at 130.50 that we could get short next week, but we'll wait and see.
We could get short next week. Oh man, it's like this is just anxiety attack special. If you're a day trader, you're like, can't we just put on a trade already?
On that one. For the Aussie, is that it? That's what the bulls will be asking themselves. Let's just
Hey, I get some Prozac, please.
blow this up so you can get a better feel of it. Now, we've had a nice big rally. We've had an ugly candle there. If we got
Ugly candle there. Speak for yourself, buddy. See, now here's a classic ricochet off the floor. So if you were a scalper, people are getting out here, right? Jeez, crazy. This fucking settings comes up. Here we go. Take a look at this nonsense. There's a price action special here. Here, Doji. Here, you put on the hedge. Boom. Fucking clean up, right? So if you're a person that doesn't want to babysit all these fucking moves, and here is the. Hopefully you got long here. This is telling you these small bodies says get the fuck in the market, right? On close, and just take a risk. We're still cleaning the vapor. They're still filling the hole here, right? Isn't that the thing? We're filling the hole, and it's about the hole, right? The vacuum. You can see that the next doji would be your exit. That's the revolving door. That's the pivot. Here again, if you don't want to babysit, you could just sell at the market. It coincides with the bodies here. Here's a hammer, but does it mean it's bullish? Like, no, not necessarily. So you don't have to put anything other on these small bodies. The only criteria that you really need to focus on as far as what's important at the end of the day on a daily candle. Here's the ultimate entry here, and you can just put your stops, I should say, several orders, and just get the best fit for the what you can afford.
got down through 74.05, then 73.80, 85, 80, 90 opens up, and then 73.30 is the recent low and should be good support. But overall, it kind of feels like in this environment that nobody really wants to go long Aussie, and that makes sense because that's what usually happens. Iron ore's higher, Chinese steel's higher, and people are getting excited about that. Oil, of course, is trying to break higher as we wait for OPEC next week. But just for me, unless stocks recover and take the foot off the Aussie, it's going to struggle a little, I think. I've written an Aussie-specific piece. I've also written a volatility-specific piece, which you can find. If you have a look at... now, I know... Where is my Aussie Kiwi? Let me open Aussie Kiwi for you. One of my viewers asked me for Aussie Kiwi. The bad news for you, bath time, is that I've got no idea, to be honest. If I look at an Aussie Kiwi...
I got no idea, to be honest. Honesty. He's soft-selling us.
It looks to me... I'm doing this on the run here. It looks to me like...
He's doing it on the run here. Gone to your head trading here. Look out. Brace yourself.
Like we've got...
He's going to put channel on.
A bit of
a bit
downtrend channel. So if I put that there,
oh boy. See, now if you were a doji trader, you would have just honestly, if you seriously can't babysit these fucking markets and you can only look at them 15 minutes per day. I think we can all see the gold mine here in the doji system. Oops, silver shut the wrong way. Please hold. I'm still working the bugs out of this fucking Screenomatic shit. Here's a killer. Like at the end of the day, you've closed where you've opened, so nothing's really happened. Here, look at this inverted fucking hammer. You put that trade on here. Once again, you just keep putting that trade on. Look at this mother cascade. This is the pressure building up. This is wave 4. This is wave 2. In Elliott wave, this is wave 2 or 4. It doesn't matter. You're either going to in a price pulse or you're in a pullback. And there's nothing else to it. Here, if you didn't cash out of something here, you're an idiot. Like if you're short and you didn't get out of something, you're an idiot. You could have bought back on that. So on the limit side, if you're going to enter on this, you're exiting into the plunge, handing off those orders to the other ones. Look at this mind-blowing, like if you really do trade candles, which you're actually seeing a moving average crossover in essence. You're seeing the open to close. You're seeing 2 moving averages. I mean, you're seeing a 2-period moving average when you look at candles, is what I'm trying to say. Open to close is a whole session. It's 1 crossing the 2. That's it. You can't start to put 618 shit out here. Like, this isn't even touching anything. How come the Fibonacci doesn't look like this? It's calling out all these tops. If Fibonacci really worked, wouldn't it call out these tops? Well, this is a Fibonacci in a way. If you put the Fibonacci tool starting here, you're getting down to a logarithmic kind of slope here. Same thing with these vacuums. Momentum's dying out in these vacuums. They're filling. These are killer trades. This here, if you're buying new lows on limits, you just killed that. Now, on the 4-hour, obviously, there's going to be a doji. 4-hour breakout dojis, no-brainer trades all day long. Look at this inverted fucking hammer. Are you kidding me? Now, it doesn't mean that you couldn't. You can't just. You're just not one. You're not one-ticket trading. You can't. So you have to be very. You have to have the polygamy thing going on, right?
Right, we've got this. It's about mid-range at the moment. So from
about mid-range, yeah, it's fair value. Now, anybody that bought this, now there's no doji here, but you have to go if you want to look for a more active trade. Go to 4-hour, or go to 8-hour chart or 12-hour chart. You can run. If you're really worried about it, you can just put MT5 down, run MT5 demos, and look at a 12-hour doji. And, of course, that's broker dependent now, too, by 12 different dojis. So anytime you go into this candle shit, you're really stuck with open to close. You've picked your momentum there. Now, from just a range standpoint only, pure range, if you just had range bars, it'd be a different story because you were volatility conscious about the really the vacuum that's going to fill. And if you're going to do, that's really what a bar chart is, the old-fashioned bar chart, where the hash marks weren't emphasized. Opening hash, closing hash. Bar charts are range bound. Line charts. In MT4, you can scroll through all 3 concepts. You have line, which is the structure. You have the bar chart, which is the range, and the candle, which is the moving average crossover system, in essence. Open to close, open to close. Did we close up or down? We crossed over. We've engulfed. The close is higher than the open of the previous bar, which means 2 periods back. 2 to 3 period moving averages make money. Cross over, go long. So some guys was saying I was full of shit. They had this 1 period move. Your system sucks. Once you go to a 5 period moving average 4, you're smacking against the wave. This is where your boat is chopping. You're going a certain speed and you're splashing. You almost think you're going to break. Every time I bet on a boat, it seems like it's going to break the hull of the boat because now you're out of sync with that wave for that trade, for that what you're going to do with that. So this guy's ridiculous, right? I mean, you got to plan these trades out. Look at the confluence here. What have you? This launching point here, which is like a 1 pip liquidity hunt there, and then kablamo. Where does it come back to revisit? And where is the stop out session start? This is a completely insanely profitable trade. This Fibonacci just gets into your way of placing your orders and thinking rationally. Now, this is no divergence here. These MACD he has set as standard. Another thing, 12, 26, 9. What the fuck is that? This is arbitrary. This looks like I'm almost call out this shit without seeing. He's got this is slow stochastics. This is RSI. God knows the fuck this is down here. ATR. Doesn't mean shit. He's not talking about it. Obviously, from an oscillation standpoint, a doji with oversold. This is no brainer fucking entry shit. Doji with a divergence here. We're getting stochastics. Yeah. 5 period because stochastics is built on a 5. This is sloppy shit. This is, we're going to, MACD, even Bill Williams has it set to 5, 34, 5. So he's trying to emulate. Bill Williams is about Elliott wave. 34 is a Fibonacci moving average of the, if you go Fibonacci moving averages, you have, 3, 5, 8, 13, 21, 34, 55, 89, But what time frame, when you switch time frames, he's on the daily here, so, a Bollinger Band trader's buying these fuckers when it touches the Bollinger Band. No questions asked, but if you get the doji, you have a volatility system but you gotta sell here. Double bottom becomes a top. Stochastics is over. But you got to get in before the crossover stochastics, though. You really got to get in before these crossover, and you just hold. Buy, lock in, hold, dump at the previous. Here it's fucking painfully obvious the trade, right? You're going to sell limits up here all day long, buy limits below all day long. Put on a hedge right now because you just had a doji.
From my point of view, it would need to get up through 108.05. That's a good 60-point rally to get me excited. I've had a bit of a wild day the last couple of days.
Get him excited. Now, this is where it just goes totally wrong for this guy. He's a chaser. You have to be with that outfit on, right?
Stochastics mildly overbought, but not terribly so.
Mildly overbought, but not terribly so. But he wouldn't get excited unless it goes higher. Had nothing to say about that.
The weekly's on Aussie Kiwi. That suggests to me it's still going down.
It's still going down. Australia Kiwi's still going down. Does this guy have his fucking mind? Look, he doesn't have a clue here. It's going up. It's going up.
I must say, my worst currency trade.
In fact, I can't go back to that weekly, but it's a complete drift down. Accumulation, drift down.
Of all time normally come from Aussie Kiwi. I may have said that in the past.
Most of the bad trades come from Aussie Kiwi because it's a choppy fucking mess, dude. He's entering on stops. He's getting his ass kicked. Something about these markets should occur to people is that the wider the spread gets, the bigger the wicks get. Because the wicks based on the fucking fact that on some of these wicks you're looking at, the spread happened to be like, on some brokers, the spread was probably 30 pips for a millisecond or something. News came out. The spread sucks dick in the Asian session. So everybody that's trading these currencies that are neighbors, Australia to the CAD to the euro to the pound, it's just a choppy mess. It's an exchange. When you go euro to the dollar to the yen, wow. Not to say the euro's not choppy, but the spread's so damn tight. There's smooth data on the dollar to the euro because there's a huge difference between those two cultures, and even a bigger one between the dollar and the yen. Anything to the yen, the yen's psychotically priced. Just my own personal opinion.
But that is certainly the case. Now, back to...
It's certainly the case. Certainly not sure where it's going.
Wrong screen. Back to other markets, and we'll have a look at oil. And specifically, I want to look at Brent today.
Brent. Why? I don't care.
Is holding on an interesting, very interesting level right now.
Interesting level. Yeah, that's what they say about interesting.
It's all went haywire because I use a different machine to write my pieces on. Right, so...
What was that? Get a different machine to... Wow, look at those Bollinger Bands. It's pretty snug. See, this is nice, smooth data here. A little choppy up here. But, let's see what we can analyze here. Look at stochastics. A lot of great trades in here. Look at this Climax sell here. Pretty brutal. Oil. It makes Forex look easy to trade, actually.
Let me just see here. Sorry, folks. I've got a different machine. When I do my posts, I write from a different machine to when I do...
Don't drink and drive.
My when I do my video. Right, let's get rid of that. And we're going to draw a trend line from there, across there. And you can see that we've had 4 days in a row where Brent has struggled to get through. If you then draw...
Struggle to get through. I thought he was going to say, look at, if we would have put a trade on right on this doji and wrote a break through the trend line, we would have cleaned up. Then we could have bought on limits like a crack whore down here. If you look at the doji, this is the real popular price carried forward. Apparently that seemed to be something that people are interested in. Of course, here's the top that became a bottom before the big fucking rally, and this is the top that became the bottom before the big fucking rally. So if we carry that forward right on this grid line, you can see you need to have buy limits sitting down here for that amazing fucking retrace from all through the floor here. And you should have been short on dojis here. Here it would have been a little bit of a adjust your targets to fit the situation. These are great trades for people that have day jobs. Doji entry. Doji days are fucking... It's like when you break the pool balls and the balls are near the pockets already.
The Fibo on Brent, you can see that this 52.50 to 52.80 region, 80 being the 61.8%.
Oh, wait, we got a fib handle here, buddy. Look at this. That's not a fib number. Oh, it's 0. Okay, he went from 100 down to here, but he drew this after the fact, so if he had known that, and if you carry these fib handles forward, this is why I don't use fib. If you notice here, what should have happened here, fib-wise, extension-wise, but they should have called this out. He should have had his fib connected here, and it called this out exactly. But the problem here is a lot of people put that on the bottom of the wick. There's no way it would fill. It's a buy. This is the bid, so it wouldn't fill. So what's the point? Right? Why would you want to gump up your... But this is the classic protocol for people to think about things like, I'll have something on the side with that meal.
$10 move lower is level what? So we've got this 30 cents. Now what's going on? I've written a special piece. Have a look at that. A bit meeting next week. Can they pull a rabbit out of the hat? US oil region.
Pull a rabbit out of a hat. That's what I'm talking about. Watch me pull a rabbit out of a hat. That's the Magic Trader. MagicTrader.com.
They're up, US supplies up, US stockpiles are coming down, but they're still elevated. So keep an eye on that one. In terms of
Keep an eye on that one. Keep an eye on that one. That's what I'm talking about.
WTI, it's trying to break higher. It looks like
it's trying to break out, dude. Here's another prime example of the trade you missed. Look at. Do you think there's any importance in this low back here? And we're seeing the exact same thing we just saw in the other currency. Now this is the West Texas Intermediate. You went from Brent crude to West Texas Intermediate. Same trade, right? Same fucking trade. New lows. People gobbled up. Here's your chance to. This is wave 2. You see the doji here. Just think 2, 4, and then 1. It's a 5-wave system. So 1 is the first thing. This is, and then 2 pull back. Giant wave 3, 4, another doji, 5, another climax. It's over. And it could just be a 1-2 punch. If you want to find the Elliott wave, you're going to have to go for time frame to time frame to find out that wave completion, and it's constantly happening on different waves you can't see. So for the daily trader, why torture yourself and just consider it's either wave 2 or wave 4. It just means the next wave should be up, and it could be the end. So wave 4, if wave 5 is very faint and it doesn't hit, and there's divergence because the price falls from, 1 and 3 price pulses. Those are the big ones. If you draw a trend line on the top of those, if it fails to meet that, so that's divergence on an oscillator, obviously. Now here's divergence he missed on the histogram of MACD. So the histogram, if you really are trading MACD, you want to go long on the first uptick. But see the divergence here? Slightly higher histogram. And you really have to get the fuck out here. And you got in here, you got to get out here. Revolving door doji, you should just about be getting out. Now you wait for a doji. In the meantime, you're going to put buy limits down here. You start putting sell limits up here just randomly, or whatever you can afford. Okay, next problem.
Slightly different. This pin low is still there. If we get, and we're pretty much there now, you get up and through the high there of about 49.60. We're at 49.70 now, so it should be able to run. So it could be that Brent takes out that trend line and has a bit of a run, but 80 is the 45.80 is the level to watch for Brent. On gold,
Watch out for it. I like that. Watch out for that. We're just going to have to wait and see.
what a night last night. It was looking fabulous up in the 1265 region. Got hammered back as
Oh boy, it got hammered back. So it got hammered back because it reached the floor that it fell out of. This is a classic situation. It's a million times to Tuesday on this. This is the doji window. It tags it, it bags it. Now you buy. You have buy limit sitting here. Look at this doji entry. And here you would have just been doji, doji, doji. You would have been adding huge bursts, fill the void, get the fuck out, and put on another hedge. Put in another tight pip hedge. Okay, next problem.
US dollar got stronger as stocks stopped falling. One night, so one of the things about volatility, which I've written in my volatility piece, is volatility begets volatility, but downside volatility doesn't necessarily mean more downside moves.
Look at his eyes bug out there during the volatility comment. Volatility doesn't beget volatility. Man.
What downside volatility does, or upside volatility for that matter, is mean the potential for volatility increases.
Potential for volatility increases. And we could have nice weather next week. Expecting a storm, something from the front.
So, and that's what we've seen in oil recently. The ATR for oil has gone from about 105 in Brent terms to 145. That's a 40% move roughly.
Well, I had to push up its glasses on that one. Man, it really moved up.
In terms of the average true range, it speaks to that increase in volatility. Now, gold.
So it's overbought now, but this is the where you could really get trapped trying to sell that. You're just kind of like put buy limits at a little bit deep there. Once again, Fibonacci nonsense has no correlation to anything in reality.
Gold, those couple of days trading gold mean that it too could march higher. My sense is that unless the stocks fall out of bed again, the gold's going to retain a bid, but may need to go back
Falls out of bed. That's my trade. Just fall out of bed and start trading.
to sort of 1233, 1235 to find a bid. And speaking of volatility, because I've run out of time, I don't want to take too much of your time. Copper.
Oh no! Don't apologize.
Copper. Last night, 9:30 as I headed to bed.
Oh, look at this, man. I got a hedge on right there. Look at this. We have signal people. I'm sending out a tweet. Copper. Holy God. I don't know what the spread is on this puppy. Look, he marked off this wick up here. Look at this fishes. Wow, look at this, man. You want to get a... Once again, he missed this entry here. How did you... This is the ultimate auction right here. New low buy. You can put on a hedge here, right at here, but here it's worth getting chopped to bits because double doji below the new low, the trap trade. Holy God! Then the scalpers come in here, sell new highs on a triple wick here, kick it back here. You just went short here, and hopefully you cashed out and you rebought. It's a choppy game. It fills this void. It retests these dojis, so you're in a hedge for the most part. Because you went short here, you rebought here, you're up on the trade, you're flat. Now you're going to put on another hedge. So you'd be like a hedge fund trader almost. Almost like, but you have to wear a tie. You're not a hedge fund trader unless you're wearing a bow tie. Means that you're a pompous analyzer of markets.
The US dollar was getting thumped.
Oh, he shook his head on that one. Thumped. Man, I'd like to thump something.
The world was going to heck, and copper was trading down below 250. As you can see, it found.
Wow, look at this guy. Oh, more fibs on here. You notice the fib? Fib didn't help us on any of those entries, did it?
Low at around $2.48 a pound. That's roughly in line with where we saw the lows. So that's a level to watch this sort of 248, 249 region.
You got to watch that region, dude. You missed the whole trade. Watch the reason now. He's kind of rubbing his beard, thinking, "I did miss that trade." It's gonna be a way to make money on these hammers.
Well, if it broke that, then it could run down. But for the moment, it remains.
Oh boy, could, maybe. It's for sure certain. It's certainly a possibility.
Supported. Chinese growth is slowing a little, but for the moment, buyers are still in base metals. That's across the board.
Moving average of 30. Dude, it's got to be set to 100 or 50 or 20. This is why he's losing. Look, he's not using the bank's moving average.
Blue here, except for zinc.
Oh, wait.
on the LME, and then it only fell 0.2%. And nickel was only down on the LME. On the Shanghai yesterday at 0.3. So overall, rebar's up, iron ore's up. It's a better environment for base metals. That should help the Aussie bets not at the moment, which is an interesting tale in itself. So on
Interesting tale in itself.
behalf of the team that actually trade.
Trick of the tail.
I want to wish you all the best. Have a great weekend. Watch that Iranian election. That could be important for oil and geopolitics next week. Watch what the president does when he's in Saudi Arabia and Israel in the next few days. And then, of course, next week we've got the OPEC meeting.
I can't wait. Why do these people bother posting this stuff? Come on, people. You can do better than this.